All right, let's have a look what's happening in the market. So today I made $6,490, and let me break down the trades that I took, and let me make it easier for you all so you can go out there and start doing this stuff on your own. We're going to talk about a few things. How much did I risk in order to do this? How do I plan my position sizing in order to do this? All right, because it's the first day of the week. How do I get sometimes $80,000 days, and when I lose like 4.2k, right? It's insane. Or today just made $6,400, which is not just, it's still a lot of money, but could be better. But anyway, I'm going to talk about the risk, position sizing, trades, strategies, entries, profit targets, stop losses, a lot of sauce. I'm going to use this whiteboard to kind of break stuff down for you. And so basically I took 3 trades today. 2 of them were green, 1 was red. But the one that was red, the thesis was right. I just got stopped out, literally just got stopped out. Then it made a big move that I was expecting. So I'll break down what I did wrong here, if I did anything wrong, and the stuff that I did good. All right. So if you stay till the end, you're going to learn how to do this stuff on your own. Now, of course, that I used a little bit extra capital to do this. My biggest position size today, I believe, was like $4,500. So nothing crazy. Let me break this stuff down so you can understand this a little bit better. Now, first thing, if you want to trade like me, man, you got to understand the time frames. Not every single trade you have to use same time frames. So the time frames that I love is 2-minute chart for first 30 minutes of the market open. Now, if you've been watching my videos, you already know this probably is a little bit repetitive. If you're not watching my videos, it's a good information. 2 minutes for first 30 minutes of the day, 5 minutes for next 1 hour of the day. That means 10 o'clock to 11 Eastern time. And then I use 10-minute chart from 11 Eastern time onwards. Okay. I do not like to trade the last 1 hour of the market, power hour. I don't like it. So basically for me, the day ends at 3 p.m. Now we understand the time frames. Let's go to the charts. The first trade of the day that I took was on Tesla. Now, the Tesla trade, I like to call this, this is too much sauce. I like to call this sucker strategy. Now, what's sucker strategy? Let's talk about it. Basically catching and grabbing all the suckers who do not know what they are doing in the market. We are legally, all legal. We are legally taking their money away from them. Like smack them, give me the fucking money. You see what I'm saying? Anyway, let me break this down so even your dog can understand what sucker strategy is. Yeah, that's better. All right, sucker strategy. After a big gap down, not a price action gap down. We're not looking for a price action gap down. This price action, that means where the price is closed like yesterday to where the prices are opening. This is price action gap down. For example, this is a gap up right here. You see this? This is a gap up. But price action filled the gap in the pre-market and then it made a price action gap towards the upside. Not something like this. We want to see not price action gap, but actual gap. For example, this right here. This is the actual gap happening. I don't know, because of white background, you might not be able to see it. Let me show you on this. You see this? This is called price action gap down, where the price is closed at 312. It's opening at like the highest point was 300. This is the price action gap downs. Okay, so after we have a price action gap down, the psychology kicks in. That means, let's say if Rob shorted Tesla at 312 and he bought 10,000 shares. Now you might be like, oh, that's so much money. No, people out there have a lot of money, right? He shorted 10,000 shares. Today the prices are opening at 298. So this is the market about to open right here, 298. He basically made $14 per share times 10,000 shares. 140,000 to basically, he got paid $140,000 to just sleep over the weekend. Now, right at the market open, what's the first thing that he's going to do? Now, what's shorting? Shorting essentially means when you're betting that the prices can go towards the downside. Now, in order to do that, you just place your order upside down. So you sell first and then you buy back later. So when you're selling something first, in order to close that, you have to buy those shares. And when people buy those shares, it creates a synthetic demand. And synthetic demand essentially can lead the price action to, as soon as the market opens, breaks below pre-market low, it reclaims. A lot of people, these people are like, oh my God, I don't want the price action to reclaim. Let me just get out now. They start getting up, prices bounce. This is called profit taking bounce. That sucker strategy, essentially sucker strategy name came from a lot of people who do not know how to trade. They go short the moment pre-market low breaks. They literally go short. They buy puts, they go short the moment pre-market low breaks because they don't know how to trade. The moment it reclaims, these people are jumping out because their stop loss is getting triggered. And also these people, like Mr. Rob, they actually getting out of a trade with a buy order. So that creates a synthetic demand and the prices can bounce. That was a thesis that I had with this Tesla trade that I took today. I was watching this pre-market low like a hawk. I was like, okay, let's see what happens. The market's about to open. I'm on a 2-minute chart. As soon as the market opened, check what happened. It broke below, try to go above. Prices can essentially push to pre-market highs with this stuff. So I was like, okay, if we get to pre-market high, I'll be happy. But anyway, first target was if we get above the VWAP. And I'm still not in a trade. I'm waiting and waiting. Okay, price break below. And this is exactly when it reclaims from this point. I jumped in. Boom. I'm in the trade. It got down, came up, reclaimed this. I got in. This is what I'm looking at from the market. Okay. I went long right there. My stop loss is a new low of the day. My profit target is going to be, first profit target is going to be half the day right here. Previous half the day is right here. And second profit target is going to be pre-market-ish high. And then comes the main pre-market, which is like $300 mark, which is sitting right here. So essentially, if you think about it, I'm risking like $1.44 to potentially make $9, which is beautiful. But initially, I'm only risking this, which is still good. I'm risking like $1 to make 2.7, which is absolutely beautiful. So I'm in the trade now. Let's see what happens. I know my stop loss is stayed around here forever. For me, there's one thing that I've learned in my trading over the course of the period, man. It's either going to be your profit target or it's going to be your stop loss. Anything in the middle, once you enter the trade, is where the emotions are. So you either wait for stop loss or profit target, nothing in the middle. Okay, so I'm just chilling there. I'm like, yeah, whatever, man. We'll see. And the prices went down, hit my stop loss. I jumped out and I was like, fuck. I jumped out. It is what it is. And this is what happened. Literally, the moment I jumped out, it went to my target. Come on, talk to me. Am I salty at Tesla? Fuck yes, I am. What you gonna do about it? What you gonna do about it, bro? It is what it is at the end of the day, you know. I followed my plan. I just know for a fact if I would not have respected my stop loss, I would have got paid. But any money that you make without being disciplined in the market is eventually going to go back in the market, be it today, be it 6 months from now. So whosoever actually held this and made money, their money is coming to the market regardless. I respected my stop loss. It is what it is. And for me, over a long period of time, man, I've been doing this for so long. I just know for a fact sometimes market does this stuff to you, but it is what it is. So the thesis was right. It just stopped me out by by like 50 cents. Straight away reclaimed, pushed the price towards the upside. It is what it is, right? Anyway, let's talk about the second trade that I took. AMD. Let's have a look. AMD trade was on a 5-minute chart and I was sitting there waiting. This is nothing yet. Still waiting. And now I want to see a pullback. I got this pullback. Especially on a level. When something like this is happening on a critical level, let's say if you have a critical level right here and the prices start pushing towards the downside, prices are coming down, and at the critical level, it does something like this. This means the level is getting respected. That means people are changing hands. That's how I want you to think about it. People are changing hands on the other side. Changing hands means some people are getting out, some people are getting in, which is why the candles become small and consolidation starts happening. And I like to call this, because it's a level and it's forming a level flag strategy. Whenever you have a level flag strategy, fam, the break of this flag becomes a beautiful entry towards the downside. And this is roughly what we were looking at for AMD, and this is what happened. At every single level, you see how the prices are doing. At every single level, it makes a beautiful flag, pushes towards the downside. On a normal day, man, this move would have paid probably like 50%, but somehow today only paid like 20-ish, 22, 23%. It could have been more, but it is what it is, I guess. But that's a trade. And at the same time, I was watching SPX. Let me break down the SPX trade for y'all, all right? One of those names that you don't want to really play around too much with. Every $50 move is a critical level. That means 62.50, 6300, 6200, 6150. I don't even draw levels on it. Every $50 move is a critical level. So now you see this level that you said on SPX, this is going to be every $50 mark. Today we had, I think, 62.50 level sitting right there. So what I did, I waited for the price action to kind of, does pretty much the same thing. Break, make me a beautiful flag. I jump in, make my money. You get my point? Let's have a look what happened here. And while you're looking at this chart, you know exactly what I'm talking about. 62.50 sitting right there. I'm waiting for a flag formation after a level, and a flag formed right there at the level 62.50. We have ORB right there as well, and this is the ORB, by the way. ORB is one of those indicators. this is my indicator which is coming out. It does, oh my god, it does everything. It marks Fibonacci's, changes the candle colors, buy signals, sell signals. Again, this is never going to be public, by the way. This is all only for limited, like my close, like for me and a couple other friends. Anyway, couple of the close people inside the chat. Anyway, so now we have this SPX 6250, and the indicator also gave me a signal to get in. The candle changing color right here, and I was like, you know what, man, this looks nice. I got in puts. The candle change color, that means momentum's there. Everything's nice. Anyway, absolutely beautiful. This trade worked. Oh my god, this trade paid. Look at this. This trade paid, but I probably sold earlier, somewhere around here. I was out because I didn't like these wicks happening at the bottom. So essentially the wicks, what does all these wicks means? There's a candle, all these wicks happening at the top, bottom. This essentially means one simple thing, which is buyers and sellers are fighting. Okay, they're fighting. Sellers are pushing the price down, buyers are pushing the price up. Over and over again, whenever this is happening, that means there's a little bit of hard time accepting the price. So I didn't want to risk a lot, so I exited roughly here. But the trade still kept going down. Like this, still trade kept going down. People who took the trade with me, they're like, look at this, 190% on SPX contracts. This is me, yo. This is me. Print. Anyway, absolutely beautiful, right? The last thing about this is how much did I risk for the day to make whatever money I made? $6,400, $6,500. How much money I risked? The first trade of the day that I take, which is Tesla, I always do a small position size. When my first trade of the day is small position size, the next trade is going to be small as well. If my first trade of the day is red, like Tesla, my next trade on AMD was either same position size or even smaller. Now, usually my first position size of the day is 2 to 3K. Now, I'm not risking 2 to 3K unless your stop loss is 99.9%, which is not. So I'm risking about 20%. So I'm essentially risking about, let's say, $500 to $600. All right, I'm risking like $400 to $600 only, and that's a risk that I have for the first trade. And I lost. No problem, right? I lost. It is what it is. Second trade, AMD is going to be same position size, or I'm going to drop the position size. That means if I have $3,000 position size on Tesla, I'm going to do 2,000 position size on, up until I get a green trade. The moment I get a green trade, the next trade is going to be big position size because I have a cushion. Now the next trade was AMD. That trade paid like 22-ish%, made like $400-500 from it. Now I'm roughly break even on the day, and that's where SPX came in, over 100% trade, and SPX pretty much just, because I have a green trade last trade, and SPX paid 100%, so that means if I had like $4,000 position size, if that trade would have gone against me, let's say, if I have $5,000, $6,000, $6,500 position, if that trade would have gone against me, I would have lost 20-30% again. So 20-30% of, let's say, $6,000, or even say $7,000, 20-30%, what is that? 20% is $1,400, right? 1,400, let's say 2,000. Now, if you think about it, I'm already break-even-ish on the day. I'm, let's say, down $200 so far. And if this trade would have gone against me, I would have been down 2,200. Now, that means I'm essentially risking 2,200 to potentially where I made 64.89. Is the risk to reward good here? Like, did I do a good job? Yes. Why? Because I like to position size based off my first trade is green or red. First trade is red, no problem, drop the position size. If the trade is green, increase the position size. And that's how I look at the whole game. It's not about every single trade basis. It's more about a framework basis. And I talk about this framework in module 6 of my program, of my mentorship program, a lot, because that's literally one of the best things that you'll do as a trader. All in all I'm going to say is, you have to have a system. I'll show you something, all right? People do not realize how much sauce I actually have in here. This is my mentorship program that I run. Anyway, we call modules, and these videos are like, some of you all might think these videos are like long videos, bro. Like, this is the money module, the main module. 5 minute, 10 minute, 8 minute, 9 minute, 16 minute, 14 minute. If I can break something down, this is one thing I always tell everybody. This is the stuff, because you could understand this. There's two ways how you can learn in pretty much anything, okay? One is repetitive, like actually in the school, same books every single year. That's like being in a school, you have to be at a certain time. I don't like that. I don't like that because you do not have any control. Second is everything is recorded. When everything is recorded, it's just like you become a number. Third is called hybrid. Hybrid means when you have a limited amount of data which is recorded already, which means I don't have to repeat myself. You don't have to wait for the class. You can just, if you're hungry, you can actually watch a lot of stuff. And then comes in real life, like in person live, which is live trading every day, where you're watching my screens and you see me do the same setups and strategies and the systems that I talk about inside the recorded modules. That creates confidence. Once you get confidence, you're like, oh my god, he made $6,400 doing the exact same stuff that he teaches in module 7.8. This is good. That increases the likability of you getting the results. I hope you enjoyed this video. I hope you learned something from this video. If you learned something from this video and you want to join in my mentorship program, because we're closing the spot soon, check out the first link in the description box below, or there will be a link somewhere on my screen as well right now. So click the link and let me know in the comments down below if you enjoyed these videos. All right, I'm out. Peace. You look after yourself.